Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Overnight, the US dollar index stages a significant rally and takes out the recent high of 92.50 and progresses on further to the 93 handle and prints a high of 93.09. With the first resistance cleared at 92.60.65, the next target, as you can see that I've indicated, comes in at 93.30.35. A break above there would give a significant move up to around about 96.5. So still, in terms of the technical implications, are bullish. Now, what triggered this move was the speech from Janet Yellen overnight, as her comments strengthened the prospects to a December rate hike. In a speech given by her titled Inflation, Uncertainty and Monetary Policy at the National Association for Business Economics annual meeting last night, Fed Chairwoman Janet Yellen reaffirmed the bank's view that raising rates gradually was the most appropriate policy amid uncertainty over inflation. With the hawkish comments made by her now, pullbacks likely to be shallow. With the support coming in now at 91.50.60, I expect to see this level contested at 30.35 and reassessed from there. So moving on to the euro, the break of the uptrend at 118.20 has given further risk to the downside, with the technical implications supporting the move. Now it looks to a target of 116.85, with the immediate target coming in at 117.50. In light of the technical implications, any advances now should find resistance around 118.45 and firmer around 118.70.90 region. The Australian dollar has succumbed to further weakness overnight, on the back of Janet Yellen's comments as well. The US dollar strengthening, the pair has been under pressure and now challenges this level of 78.60 after printing a low of 58. Now, a couple of things to take note is the fact that the 60-day moving average that I use is regarded as a CTA level. Now, CTAs are known as commodity trading advisors or hedge funds. And you can see here when it does break this level, the market does move quite significantly in terms of a trend. So if we do break beneath this level, clearly it comes in around 60.70, but I would like to see the move completely take out the level of 68.60 as it was respected last night. Then this would expose further weakness to 76.50 to 77.20 as an objective, with any advances now seen at 79.20.25 as a cap. The dollar-yen case, of course, strengthened with the US dollar, but I will heed some caution though. The fact is that we can still get geopolitical uncertainty due to the fact that overnight we have had a couple of more comments, and there was one I found according to Pennsylvania State University Professor Joseph De Thomas. He wrote an article by 38 North. That is a website run by the US Korean Institute at St. Johns Hopkins School of Advanced International Studies. Now, he warned that both sides have maneuvered themselves psychologically into the belief that a war is inevitable. And of course, we did get the comments earlier from Foreign Minister Ri Hong-ho, who told the reporters in New York that the whole world should remember it was the US who first declared war on our country. We will have every right to take countable measures, including the right to shoot down US states' strategic bombers, even when they are not inside the airspace border of our country. Now, from these comments and any new comments come in, the market will again look to the downside. So the most resistance comes in at 70. And we did get a low yesterday of 48, so the support at 45 at this stage is being respected. And I do expect to see a base holding at 110.90. So trading from alongside, do be a little bit cautious in case we we do get a rejection from 70, and we could look back towards the lows again, seen at 111.45 and reassess from there. Well, the British pound eases lower overnight and now takes out the support at 134.30 to expose the next target at 132.60. It is viewed though, and also I do heed some caution, that the Bank of England Governor Mark Carney is speaking tomorrow, and if he does come out and give any kind of hawkish comments, could see the pound rally back towards 136, even though the technical implications are still pointing south. My view is that I would hold the target of 132.60, considering we have broken at 134.30, and the first resistance seen at 135.2025. Very mixed price action with gold, purely for the fact is that with Janet Yellen's comments has erased all the gains now and plummeted $21 overnight from 1,313 to 1,292. At the moment, the market is pressuring the downside, and I do see support at 87 and a base holding at 1,280.82. I'm not getting overly bearish at the bottom of the range, and I do expect to see the market recover with immediate target seen at 98 and then up towards 10.12 and reassess from there. Oil, still considering whether the market can rally or not above 52.30, and if so, then we would bring in a target of 53.60. But my concerns is the fact that this rally could be a one-off, so do be a little bit cautious. The target was met, so I'd rather sit out on the sidelines for the moment, just in case we do see a pullback to 51.5. And to wrap up with silver, this support needs to be defended by the bulls and stage a recovery. Otherwise, concerns will be the fact that we could see a breakdown towards $16.60. But I am in view that the market may stage a recovery from here. Therefore, I'm not going to get over bearish at the bottom of the range, and I do expect to see a recovery back up towards $17.15, and then maybe further if we get further comments of the geopolitical risks out there. So and also there is some, if you look here, we have got some divergence. So as the market is making new lows, the RSI is supporting a recovery. So I hold that view at the moment. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a wonderful day that's ahead of you.